Grain export opportunities in Asia, and a trip to the World Dairy Expo. Those stories, market prices, and agri-weather, all for this Monday, October 10th.
Good morning. This is the Agribusiness News Leader, the Morning Ag Report, with Wayne Jenkins and Brian Baxter.
Good Monday morning to you. Welcome to the Morning Ag Report. I'm Brian Baxter.
And I'm Wayne Jenkins. We hope your weekend was a good one. And Brian, in most spots it was on the dry side. We'll keep that for a day or two.
That's right, and that makes for some rapid harvest progress. And we're going to check that out a little bit later in the weather, along with the crop moisture situation. Let's lead off today with a brief glance at some of the items making our farm news headlines. Private crop estimates are being raised ahead of the USDA's crop report, which is due this Wednesday. No long-term grain trade agreement between the U.S. and Soviet Union yet, but optimism remains. And world trade talks may bring some changes in world farm subsidies if negotiators can agree at a December meeting. We'll have our full farm news update a little bit later this morning, but right now, Wayne's going to check out Friday's grain market action.
And here we go. On the Chicago Board of Trade last Friday, harvest pressure was felt in the soybean pits, pushing those futures through their support levels in the harvest contract. For the week, soybean futures had a technical reversal to the downside, and this is expected to affect tradings and traders' thinking for this coming week. Also, this coming Wednesday, the USDA will update their monthly crop reports, and the expectations are that the soybean crop figures will be revised upward. Now, for the week, the nearby soybean contracts were down 23 cents. On the Friday closing, November soybeans were down 22 3/4 cents. At 7.90, January beans fell 21 3/4 cents to end the week at 8.01. March beans dropped 21 1/4 cents, ending at 8.07. October soy meal lost $6.70 a ton last Friday and closed at $255.30. And October soy oil fell 67 points, ending at 23.78 cents. Chicago corn futures came under selling pressure last Friday, with futures unable to pass their $3 resistance. There was some hedge pressure on corn, but not to the extent that it was evident in soybeans. For the week, nearby corn futures fell 8 1/2 cents. And on the Friday close, December corn was off 3 3/4 cents at 2.98 1/4. March corn lost 4 cents and ended at 2.97. May corn fell 3 1/2 cents to end the week at 2.98. And wheat futures, after scoring new contract highs last Thursday, backed off in the early Friday trading, but managed to turn around and close generally higher. Commercial buying and demand talk were helpful to the wheat market. For the week, December old crop wheat was up 29 3/4 cents. At the Friday bell, December Chicago was up 1 3/4 cents at 4.34 1/2. March Chicago wheat gained 1 3/4 cents to end at 4.39 1/4. Kansas City December rose 3 1/2 cents at 4.23 1/2, and Minneapolis December was up 2 1/2 cents, closing the week at 4.23 3/4. New York cotton futures continued to show little price direction last Friday, with many traders waiting for this Wednesday's crop report. Cotton traders will be looking for the export figures in the new USDA estimate. Well, at the close, October cotton was at 56.66 cents. That was up 41 points, and December cotton ended at 52.76 cents, up 29 points. So that's the shape of those markets, Brian.
Kind of a sideways trading week at the Chicago Mercantile Exchange last week. On Friday, cattle futures closed mostly lower in the nearby contracts and slightly higher in the deferred contracts. Feeder cattle, however, gained general price strength and closed higher for the day. For last week overall, nearby live cattle futures were up by 57 cents. But on Friday's close, the October live cattle were down 15 cents at 72.32. December live cattle dropped 7 cents, ending the week at 74.55. November feeder cattle gained 55 cents, ending at 83.30. Cash markets were lightly tested. Both Illinois direct and interior Iowa cash cattle were steady last Friday at $71. The slaughter was 129,000, and the kill for the week, 639,000. Chicago live hogs showed very good strength in the early Friday trade, but lost all of their gains in the latter part of the session, due mainly to heavy selling in the pork belly market. For last week overall, nearby live hogs were up by 85 cents. For Friday, October live hogs were up 43 cents, closing at 40.45. December live hogs, though, dropped 8 cents, finishing at $42.42. February pork bellies dropped $1.15 to end the week at $47.52. The cash market ranged from 50 cents lower to 50 cents higher Friday. Omaha down 50 cents at $40.50, and St. Louis cash hogs steady at $41 even. The hog slaughter Friday, 329,000. The kill for the week, 1,652,000. In the sheep markets last week, slaughter lambs were steady to higher at Midwest market centers, where 90 to 120-pound shorn lambs ranged from $62 to $65. At Oklahoma City, feeder lamb prices were lower last week, with 50 to 65-pound feeders ranging in price from $57.25 to $63. Sheep slaughter on Friday was 19,000. The kill for the week, 96,000. And on Wall Street, the Dow Jones Industrial Average had a good gain on Friday, 42.40 points higher, ending the week at 2150.20. The volume was very heavy at 216,390,000 shares. The gainers at 1133, the losers 396. And the NYSE Composite Stock Index closed at 156.81. That was up 2.88 points.
Today's Morning Ag Report market update and analysis was prepared by Richard Brock and Associates.
Still ahead this morning, we'll have a report on the World Dairy Expo.
And up next, the national and international agri-news. Now, our report of today's farm news. One of the big news items for agriculture this week will be the USDA's October crop production report, which is due to be released on Wednesday afternoon. Ahead of the official USDA numbers, some private crop estimates have been released and have been somewhat surprising. Last week, Sparks Commodities estimated the 1988 soybean crop at 1.54 billion bushels. That's surprising because that's higher than the USDA's last estimate of 1.47 billion. For corn, Sparks pegged U.S. output at 4.47 billion bushels. That's again higher than the USDA's last estimate of 4.46 billion. Grain trading may be quiet this week as traders await the USDA numbers for Wednesday.
The 5-year grain trade agreement between the U.S. and the Soviet Union expired last month and last week passed with no progress on a new LTA. But in Washington last Friday, the LTA negotiator for the U.S., Deputy Trade Representative Alan Holmer, told reporters the administration wants to get a new agreement with the Soviets as soon as possible. Holmer denied any special bonus offers to induce the Soviets to sign a new LTA, and although he did not comment on a date for further talks, sources said another meeting with the Soviets could take place in the next 2 weeks. And in Moscow last week, Soviet leader Mikhail Gorbachev strengthened his hold on the Soviet government by moving his chief rival, Viktor Ligachev, further from the center of power. Ligachev is a hardline conservative communist, and General Secretary Gorbachev placed him in charge of Soviet agriculture. Well, last week, a team of Soviet farm managers visited the United States as guests of the American Soybean Association. ASA's East Europe director Alex Cherney led the Soviet team, and during a stop on an Indiana farm, he was asked for his view of the changes in the Soviet government.
I am not a politician, and I can give you only a common sense response to that. All these changes that are taking now place in Soviet Union, this is just part of the changes that are already taking place these last 3 years since Secretary Gorbachev took control. I personally, and I hope I can speak in the name of the delegation, are viewing these latest developments as positive, will strengthen the idea of moving forward.
Cherney said Soviet agriculture will continue restructuring and improving its productivity. And as for U.S. and Soviet relations, he said a new long-term grain trade agreement may not be needed.
I let these politicians to go about this. We are satisfied with the level we are working directly. And if it were only between farmers and farmers, I don't think we need any agreement. I mean, we can deal directly. The more, the better we know each other, the less agreements we need.
Agricultural trade has become a major point in international trade negotiations and the General Agreement on Tariffs and Trade. The current Uruguay GATT round is due for a midterm review, which is set to take place in Montreal, Canada this December. Ahead of the review, the European Community's position remains focused on a global market-sharing arrangement with no greater market access. But the United States has modified its position by offering to consider the Cairns Group proposal of a 10% cut in farm subsidies for 2 consecutive years. However, the chief U.S. farm issue negotiator at the GATT, Dan Amstutz, has warned that the EC is mistaken if it thinks the U.S. will weaken its stance on eliminating farm subsidies worldwide in the long term. And another voice is being heard. The International Policy Council on Agriculture and Trade has called on the U.S. and the EC to resolve their differences at the midterm GATT review. IPC member and Purdue Ag Dean Bob Thompson said the Montreal meeting is the first chance for concrete action, and he said it's a unique opportunity to correct the disarray in world agriculture.
The 1988 drought cut U.S. corn production almost in half, but despite lower supplies, U.S. farmers still need to work hard to develop more export business. That was one message resulting from a recent U.S. Feed Grains Council farmer trade mission to Southeast Asia. Jeff Hackett has the story.
By now, everyone knows about the record-setting drought the U.S. had this year and its effects on agricultural production. But these farmers have just returned from trying to increase the use of U.S. feed grains in Asian markets. Why are they trying to sell grain to China after a devastating drought back home?
The U.S. crop this year is going to be big enough to meet demand with the carryover that we already have back home in the bins.
Reason number 2.
If we don't get over here and work to help these people in the technical business of building a livestock industry, they're not going to need feed grains.
The group was concerned about the need to develop new markets for their products in order to get away from government support payments in the long run.
We can't ever give up on exports. It's a medium of exchange for us. It helps to balance our world trade. It's 20% of our production. You can't give up 20% of your factory producing capacity and expect to survive.
Working with the Chinese year in and year out, the farmer-supported U.S. Feed Grains Council is predicting a turnaround in a market which, until now, has actually exported grain. Here's how it works. 2 years ago, the Chinese government began to loosen central controls, and selected areas of the economy took off. New prosperity boosted demand for meat, and China has all but run out of cropland to grow enough grain to feed livestock. The bottom line?
If the production of meat products, pork in particular, continues at the pace it appears to in China today, they will outstrip their capacity to produce, so they'll have to import grain from some other source, hopefully from us, to fill that need.
What's old hat to U.S. farmers is high-tech to Chinese farmers. Helping to develop modern livestock feeding in China can pay big dividends to U.S. feed grain producers down the road. I'm Jeff Hackett reporting.
The nation's groundwater will appear more contaminated in coming years simply because more people are looking for contamination. That, according to a report released last Friday by the U.S. Geological Survey, which said that in general, groundwater quality is good. The survey spokesman said groundwater quality has not changed much in the past few years, although all states report some degree of contamination. Groundwater provides drinking water for 53% of the U.S. population, mostly in rural areas, and the Environmental Protection Agency has estimated that 3% of U.S. groundwater supplies are too contaminated to drink.
Coming up next, we'll have a look at last week's World Dairy Expo, so don't go away.
Milk production has been on the rise this year, and in turn, dairy product output has made gains as well. USDA reported last week that August butter production was up 12% from last year, and ice cream production during August was up 4% from a year ago.
And in Madison, Wisconsin last week, the World Dairy Expo brought together dairy farmers, experts, and industry leaders to share ideas to show, buy, and sell cattle and to see the latest in dairy farm technology. The World Dairy Expo wrapped up on Saturday and attracted a crowd of about 60,000 during its 4-day run. The annual expo is part fun, part dairy industry promotion, and is also an important business forum.
World Dairy Expo is a fun place for people to go to transact business. Most of the people will tell you that they love to come to World Dairy Expo and they enjoy it and look forward to it every year, but there's also a tremendous amount of business that goes on here.
The Dairy Expo's trade show is among the world's largest and gives companies a chance to show off new products.
The drought has created a different feeding situation on a lot of farms. TLC is a new option to consider. It's a high-energy, dense nutrient package that will help supplement and overcome some of the deficiencies that occurred on the crops that grown on the farms.
And for dairy farmers, the expo is the place to comparison shop for everything from new equipment to genetics that may improve herd quality.
I'll look more at anything that will help my calves get better starts, faster growth rate, maybe something that'll be better health-wise for them. I think my husband will look at the different seed corn and the different feeds.
And the World Dairy Expo had nearly 400 exhibitors and attracted guests from 50 countries.
Well, coming next, we'll check the crop moisture conditions in your agri-weather forecast.
We're starting this week with a pretty dry situation over most of the country.
Yeah, the word for the day is high pressure. That normally means very good harvesting weather.
That's right.
But you better do it early because that could change by midweek. Now, let's look at our morning temperatures very quickly here. First off, it's in the 30s in the northeast, frosty there this morning. The 60s show up in the southwest and in southern Florida. Both states are in the 40s this morning. The weather map for today shows some showers along the Louisiana Gulf Coast, along the Atlantic coast from South Carolina to southern Florida. Some cold rains, maybe snows in eastern Ontario into Quebec. Warming in the western plains. The grain belt's morning condensation lighter today. Morning field delays will be shorter. The warmer air will help initiate renewed pastures and forages, but keep a close eye on Sudan sorghum. High temperatures today from the cool 30s in the northeast to the 90s in southern Arizona and Arizona. Plenty of highs in the 60s and 70s today. Now, Ryan, this latest crop moisture map's a far cry from a month ago.
That's right. The October 1st map shows a lot of improvement, but we're not out of the woods yet. We do need some rains. Here's the way it looks. The orange areas of the crop moisture map have diminished in size again, except for the far southwest and eastern Texas. This indicates recent rains have greatly improved the moisture situation in the first 5 feet of soils. Even though the Corn Belt shows neutral gray, it doesn't mean we're out of the woods. More rains are needed. The green areas show abundant moisture. Now let's look at the 90-day outlook for temperatures. Above normal readings from the Delta and mid-Mississippi Valley to all of the East Coast except for New England. The implications for this are overwintering grains will have a chance for some extra growth, and cold stress levels will be lower than usual. In contrast, below normal temperatures are seen from the upper Rio Grande Valley through the Central Rockies and to most all of the northern plains. If this outlook holds up, extra attention to livestock will be needed, and overwintering grains will need a good snow blanket for winter kill protection. And some of those snows may materialize in the Central Plains and East Central Rockies. This will be a part of a large region where above normal precipitation is expected. That region extends from Colorado and the Texas-Oklahoma panhandles to Alabama in the south and Pennsylvania in the north. In the east, the above normal precipitation forecast the next 90 days. Higher than usual temperatures will tend to bring chilly rains rather than too much snow. This precipitation, if it materializes, will be beneficial in the long run and will keep farmers and ranchers busy in some less than ideal working conditions. Those are the 90-day outlooks. Now a break for the Monday local forecasts. And that's your farm weather forecast for today.
And we have a farm news note for you this morning. The state of Nebraska has set aside $1 million to help farmers implement soil conservation plans. Nebraska farmers have until November 1st to apply for grants of up to $35,000 each for farm conservation projects.
And that wraps up this Monday edition of the Morning Ag Report. We thank you for being with us today. I'm Brian Baxter.
I'm Wayne Jenkins. Have a safe and enjoyable day.